My next guest agrees. He's also focusing on the labor market and the CPI numbers in the coming months. Joining me is Jay Bryson. He's the chief economist at Wells Fargo. Great to check in with you, Jay, because we need some plain talk on the economy right now. What do you think is happening?
Well, Kelly, I mean, there certainly is a slowdown going on. I mean, we see that in the GDP numbers, if you just want to focus on that. You know, one thing I like to look at is the year-over-year rate. That kind of smooths out the quarterly volatility. You know, in the first year, the economy was up 3.6% on a year-over-year basis. It's only up 1% right now. So there's clearly a slowdown going on right now. We're probably not yet in a recession, but clearly things are slowing out there.
Yeah, I mean, I do think it's worth pointing out how much of this is strong nominal growth. It's pretty, I mean, we had nominal GDP growth 8% in the second quarter. I mean, that's a huge demand push, if you want to call it that. It's just that it's all going into inflation.
Yeah, that's right. It's, you know, nominal GDP is the addition or the combination of real GDP growth and inflation, and the vast majority of it right now is inflation. We economists, we like to focus on the real sort of numbers because at the end of the day, what we're looking at is the ability to buy goods and services, you know, in volume terms, and that's why you look at the real side of things. Inflation doesn't do anything for anybody, really.
So the recession question to me feels like on the one hand, we're already there. If you wanted to say what is a recession, well, you know, it's eroding low-income consumers' purchasing power in particular. You know, consumer confidence readings have been at pretty much all-time lows. And this is all because the Fed, they didn't tighten us into a recession. They loosened us into one. So what do they do now? They just hiked again another 75 basis points yesterday. What should the trajectory look like from here?
You know, Kelly, I think at this point, they're really in data dependency mode. Up to this point, or the last 2 or 3 meetings, they're pretty much on autopilot. They're trying to go from zero to what they would classify as neutral, and that is a rate that's neither stimulating the economy nor restraining it. And so right now, we're probably at neutral. Many members think we need to go into restrictive, so have some restraint, but that's a trickier sort of question. And so they're really going to be looking at all the data coming up. But for me, 2 of the most important ones will be the labor market reports. We'll get 2 more of those between now and the end of September, and 2 more CPI inflation reports. Those things will be key, and I think will really determine how the Fed progresses from here.
Yeah, at the same time, the jobless claims, the leading labor market indicator, looks pretty healthy still. I mean, 250,000 by historical measures is nothing to be alarmed about.
Well, it's the change there that you really have to look at. And actually, the change, we've been trending up now for 6 weeks or maybe even 8 weeks now in terms of the initial jobless claims. But what we were looking at earlier was continuing claims. So these are people who continue to file for unemployment benefits. And what's interesting there is they haven't moved. They stay rock bottom low. So what that's telling me about the job market right now is people are losing their jobs. They file for unemployment insurance for the first time, but they don't continue to file because, guess what? They've gone out and they found another job. So that tells me that the labor market still is holding up okay at this point.
So where do you come down on kind of, so the economy is slowing. You think maybe the Fed should take a pause here and reevaluate or keep going? What's the bottom line?
I think the bottom line, again, really, Kelly, is it's really going to depend on the incoming data. If we get a strong labor market report next week, next Friday, that tells me the Fed probably needs to keep going here. And then also couple on top of that the inflation sort of numbers that we're going to get in mid-August. If the core rate of inflation, when you strip out energy, because we know gasoline prices are down, if you look at the core rate of inflation, if that continues to come in pretty hot, then my sense would be the Fed's going to continue to raise rates. You know, it's probably, maybe it's not 75 again, maybe it's only 50, but they're probably going to continue to raise rates.
All right, Jay Bryson, thank you for your time. We'll leave it there. We appreciate it.
Shepard Smith here. Thanks for watching CNBC on YouTube.